with this session, how to find multi-bagger stocks. So first thing is you should never look for multi-baggers actually, and I will explain why. But what this term means, anybody knows what's a multi-bagger? So for me, multi-bagger is some stock which goes up by 5 to 7 times in, let's say, 4 to 5 years. That's a typical multi-bagger. So multi-bagger by definition moves in times. We are calculating in how many times this stock price increases, not in how many percentages. So our thinking is little different. So basically, for a stock price to increase, the market cap of the company should increase, and for that the earnings of a company should increase. So what's the earnings? So earnings is basically the net profit of a company. So we are looking at some stock which is increasing its earnings very fast. Okay. So first, starting from that, this is something about me. So I have been studying markets since 2018. So what did I saw in the market? So this bull market, you know, no? When the prices increases, that's a bull market. When prices decrease, it's a bear market. So this bull market was led by PSU banks. So all the banks. Then there was infra-related companies. Then there was stocks of railways. So RVNL stock was, I remember, 1 year ago 23 rupees. Today it's more than 300, I think. So more than 10x. So these railway stocks, defense stocks. So HAL, you can look at it. It is, I think, 5,400 something about it, and the stock was at less than 2,000 a year ago. So defense, railway, PSU banks, infra stocks all became multi-baggers in this time, and it's very different from a standpoint which normal people think about, that PSUs are bad, and this notion really got challenged. So this was all I saw in the market from 2018 to 2024. And here are some books that you can refer if you want to understand markets. One very interesting, 100 baggers, and we will discuss some philosophy of it. And there are other as well. Specifically, you can read Lynch and this, in Indian context, Thoughtful Investor, written by Vasant Maheshwari, very good book. So one more thing, in 2020, I invested in discovered a story called as financialization of India, like that all the savings that Indians have, they will pour that into stock markets and all. So I identified that the biggest proxy to play this trend is this company called as CDSL. So it's Central Depository Services Limited. Depositories is like you deposit your money in bank accounts. Similarly, depository holds your stocks, and it's kind of a monopoly. Almost 70% of the market it holds. So I thought, whatever happens in the market, this will benefit, and the stock nearly became 8-9 bagger. And actually, I invested very less in it, so that was one of my biggest regret. And through that, I understand that no matter how intelligent you are, if you do not bet big on things that you believe, there is no value of it, right? So let's discuss about some maths of stock prices. So let's say P is the price of the stock. We will divide it by the earnings. What is earnings? Net profit. How do we calculate it? For example, Reliance Industries make profit of 1,000 crore in this financial year. So
not visible.
So this earnings are calculated by, let's say 1,000 crore was net profit of Reliance Industries. We will divide it by the number of shares. Let's say the number of shares are 100 crores. So we will get the E or the EPS. EPS is earning per share, let's say rupees 10. So we will divide the price of the stock with the earning per share, and we get the P ratio, right? So if we multiply this by earnings again, we will get what? The price of the stock. E cancels. So if you want to like simple calculus, no, not calculus, delta P is what? Change in P, let's say this is P ratio plus change in E. So if you want the price to increase, either the P ratio should increase or the earnings should increase. Either one has to happen, right? So this is what we gonna discuss here. Similar to that, here is the concept of double engine stocks. So this stock will have increase in P, and we call it as P expansion, and if you want to be nerdy, you can call it as P re-rating. That's what referred to in newspapers, etc. And the second thing is, it simultaneously also has earnings growth. Its earnings are increasing every quarter, every year, the earnings are increasing. How it will happen? How will the price earning increase? Price earning, if you want to understand it simply, it's the perception of the stock. If the perception of certain stocks get increases, the P increases. Like I will show you an example. So here this stock RVNL, and we will look at its P ratio. So what can you see what really happened from 2022? Its P was 7 and now its P is almost 90. क्या हुआ? So you can see from here its P was around 6, 7, and now its P is 90. So what has happened in this stock? This is called as P expansion. The price earning multiple increased. Okay. So for stock to become multi-bagger, this is a very important thing, that its price earning increase. How can the price earning increase? First thing, the perception about the stock changes. So in 2022, nobody was looking at RVNL. It was some sort of PSU. Nobody cared about it. Then there was something happened in this stock, and it became a market leader in this bull market, you can say. And it started coming in TV reports, in research reports, in broker calls, in WhatsApp messages, everywhere. Buy RVNL, buy RVNL, and people resorts to buy it, and this is what happened. If you see the price of this stock, it went from somewhere, what I was saying, around 30 rupees to today it is more than 600. So if you see, the P expansion and the price is almost kind of equal. So that is the one thing. And if you can see some volumes, this is the volume bars, and people are here buying this stock like crazy in all this duration, and that's why they have increased the P of this stock. So the second thing is earnings growth. That should happen. So for earnings growth to happen, there has to be something in the company that why this earnings growth is happening. That, for example, I gave you example of CDSL, that there is financialization happening. So more and more new demat accounts are opening. That's why more customers means more sales means more profit, and that's where the earnings growth is coming from. If you take example of the stocks which has given largest return in Nifty 50, like take the example of Britannia or JSW Steel or Bajaj Finance. Bajaj Finance is a very good example. Bajaj Finance, if you see the stock literally, so can you see, almost 13 years back it was at 56, today it is more than 7,000. So almost 120 times in last 13-14 years. So this is the level of multi-baggers I am talking about. But how did this happen? So is it due to P increase? So let's see the P of this stock. So in 2015 the P was 27 and now the P is 30. That means that no, price earning has not increased that much. So what did happen in this stock was earnings growth. Its sales, its profits gone increasing every quarter by quarter, every year by year. And what was the reason for it? The reason for it was that when an economy which is at a stage of $1,500 per capita income, when it increases to $3,000, around today's $3,000 almost, what happens in this time period? A lot of wealth get created, and due to this, people have discretionary income to spend, and they will now have ability to take credit for. So what did Bajaj Finance do? Bajaj Finance actually finances your consumer durables. If you go some electronic shop, then there will be one guy of Bajaj Finance who will finance it, and they all make some commission. So that is the business model of Bajaj Finance, and they were the perfect to capture this consumer growth happening in India, that the rise of the middle class. This company subsided with it, and because the management was very good, the business model was very good, this company earnings became like anything, right? So how can we identify some company which has potential to become has good earnings? The most important thing is to capture is this ratio called as return on equity. It's just you divide the earnings by total equity. Equity just means assets minus liability. Okay. So if you see the ROE of this stock Bajaj Finance, it is 22%. Earlier it used to be 30% actually. So so why did the ROE decrease? Because they increase a lot of, they did a lot of capex in terms of their branches, employees and all. So their expenses increases. So obviously expense increases, so profit will go down. That's why ROE is 22% right now. But it used to be 30%. So if you want to grow at more than your ROE, then you actually need to take more capital. So that's why having a high ROE is very important. It tells everything about the business model. If a business model is good, it will always have a high ROE. Let's take an example of some other business, Asian Paints. So the ROE is 32%, and if you see the price of this stock, it went from 314 in 2011 October, now it is around 3,500. So that is the kind of wealth being created, and you will see typical same examples. The stocks that created a lot of wealth in long term, they will always have a high return on equity with them, because that shows the kind of business model that it has. Also, return on capital employed is also similar ratio only. So for example, it has return on capital of 38%, but Asian Paints.
So can I ask something? So has it happened that some company or stock which had a good ROE, right, ROE, but it did not show this much growth in the price?
Because let me give you an analogy of understanding the relation between the two. ROE is like your education, your degree. So let's say you are studying in ISER, you have a good education background. Somebody has not, but doesn't determine that how much success you will gain in life. But it shows your potential, right? But the main trigger of something to get multi-bagger is actually earnings growth. And so ROE just tells the potential of this company, but doesn't. You can compare earnings growth to be your hard work. So actually, your what position you will reach in life is dependent on not your degree, on not on your education, but on your hard work that you put in life, how much passion you have and all. So that is actually earnings, but it shows your potential.
Okay, so has something that, I mean, can you give an example where something that failed, which had good ROI at one point, but then
Yes, many examples.
Okay.
Like for example, ROI also depends on business model. So for example, any financial stock will not have a great ROI because there is some limitation of the business model. But if you see stocks which basically how ROI increases is that if you have less assets with you and you doing more sales per those assets, the more is your ROI. For example, if you do not buy an office but rent it out, your ROI will increase. It tells you how efficient your company really is. Like for example, if you employ less people and do more sales, your ROI will be more. So all the internet businesses they will have good ROI because there is no expense, right? So if you see all these businesses like TCS, Infosys, like I can give example. If you see TCS, so the ROE is 51%. Doesn't mean that the stock will give a 51% CAGR. If you see its price, it's also sort of a multi-bagger only. If you get 10 years, so 10 years ago the price was 1,200 something. Today it is around 4,500. So 4-5x in 10 years. But the ROE was great, right? So ROE just tells the efficiency of a business.
The opposite also happens, like with what we saw with Ola Electric. The fundamentals are pretty bad. But
The Ola Electric is all about, this is a bull market, right? Everyone is optimistic about stocks, and because it's in the EV section and also it's related to Ola, some technology is also there. People are, I'm saying the same thing. For price is dependent on PE as well as E. So its PE will be very high, price earning ratio. It tells the perception. The perception is very strong. Like the company will do this and do this. I will show you one more stock.
a high PE means that a stock is overbought.
It has a higher valuation. It is expensive actually.
Yeah, so it is not actually recommended. Like what I have learned is that if a stock has a high PE in comparison to its peers, it's actually a bad thing. I look
It's a
for
bad thing,
lower
but
PE.
you have to remember that finance is not mathematics actually. So 2 multiplied by 2 will be 4 in maths, but not necessarily in finance. Because PE can remain exorbitantly high for a very long period of time. So this is one thing for analysis, but you have to get too deeply into why the PE is high. So for example, for consumer businesses, if you see Nestle, HUL, Asian Paints, these businesses have very high PE, always 80, 90. But why the market gives high PE to these stocks? Because they have a very high predictability of earnings. Nestle makes baby milk and these noodles and all. So obviously, nothing. Whatever happens to the economy, Maggie will continue to be bought, and Cerelac will be continue to be bought. So these stocks, these are high quality stocks. They will have high PE. Also, PE is dependent on ROE. A stock which has high ROE determines it's an efficient business. Market gives more PE to that stock. So that is also happens. So I will show you an example of a stock. So you can see the stock period is 909, and so earlier, around 2 years back, the PE was 26. Now it's 909. So all the price increase of this stock has happened because of the PE rating. It's not due to earnings. It's not due to the sales or profit has increased. You want to ask something? So it's a very good
increase because of the volume.
Okay, so the P increased because the perception of the company increased, because it's actually manufacture defense equipment, also electronic equipments, and it was a PSU. So it is kind of the best in this bull run, because this bull run was led by defense PSU. So it also function in defense. It also has manufacturing theme also. It comes also under PSU theme also. Every theme it comes, so people just bought thinking price will increase, and that happened obviously. So P can be exorbitant, and even if you buy the stock now also, maybe the stock doubles, who knows. But so P, these are just simple things, but these are not like physics rules that these will be followed. These are just simple, like kind of nuggets of wisdom, nothing else. So this was a book, 100 Baggers, and this was a book in Indian context, 100 Baggers in 2015 written. So it talks about how can a stock be 100 bagger, and let's see what it discusses. The first thing that he tells about, if you get 14% CAGR return, it takes 35 years to the stock to become 100 bagger. If you increase the CAGR, let's see this, from 26 to 36, 10% increase in CAGR, and the time dropped from 20 to 15. So roughly you should target this. In 20 years, 26% CAGR is possible, and I will show you how it is possible. So you can really achieve this. In 20 years, you can get a stock to be on 100 bagger like you. So I will give you a very good example of case study of Balkrishna Industries, also called as BKT Tires, Balkrishna Tires. If you have seen IPL, it was a sponsor also. So basically, it does a very basic thing. What does it does? This company makes off the highway tires. What does it means? Like, for example, these tires are used in cranes, in tractors, etc. And the market is India also, it's exported also. So there is something in the business model that you should be able to understand why this business has something in it. That is called the moat of the business. Moat of the business means what is the competitive advantage of this business. So I will give you example of this business, what I was telling, Balkrishna Industries or BKT, Balkrishna Tires. So basically these tires are customized made for particular clients. So mass manufacturing through machines is not possible. So BKT has a advantage here, that because of India we have labor costs are very low. So it has the lowest cost of production compared to all its competitors. And that's why because of this competitive advantage, even though the industry is not very sexy, if you see making what is it doing exactly? It is making tires for tractors. But it went to be a 1500 bagger, not a 100 bagger. So if you have invested 1 lakh rupees in Balkrishna Industries around 20 years back, it will be worth 15 crores today. Normally jewelers, what they do, they take gold jewelry and then they will make ornaments and then they will sell. What Titan did, we will not buy gold, we will lease out gold. So that, because gold prices are very volatile. So for example, there was recently in the budget that gold duty will be decreased. So prices of gold crashed. So prices of gold crashed, then instantaneously if some gold is there in your inventory for selling, prices got crashed with no fault of yours. So what Titan did, because through this, if they will not buy gold, if we lease out gold, first thing, we will not have to put money in the business. So automatically what will happen? Their capital requirement decreases, their return on equity increases, and the business automatically becomes more scalable, that it can be scaled further. And that was something, these things that became Titan, this 200 value. These are all the examples. One sector you will find common will be technology, like Infosys, like Wipro, like KPIT. Other will be here, the second sector will be consumer. There will be a lot of consumer stocks. Like you will see Imami, you will see. Then you will see Eicher Motors. Eicher Motors basically makes these, bullet bikes. This is made by Eicher Motors. Firstly, you will start from a low market cap if you want a multi-bagger. For example, if you say Bajaj Finance will be a multi-bagger, it can be possible because the market cap is 4 lakh crore. If you say that it will get 10x, then the market cap has to go to 40 lakh crore. Do you think that NBFC like Bajaj Finance can be worth 40 lakh crores. Not probable, because the largest company relies in the industry which is 20 lakh crores market cap. So it has to start from a lower market cap. Preferable it is less than $1 billion, less than 8,000 crores. So these are typically classified as small caps. So if you want a multi-bagger, it will be a small cap for sure. But in the process, it will become a large cap. So for example, when Titan, Rakesh ji invested in Titan 30 years back, it was a small cap. But now it's become a blue chip, large cap. The second will be, you will start with a low price to earning multiple. Because you want price to increase, so PE should increase. So you will start with a low PE. So you can buy, like for example, I showed you Bharat Electronics at 915 PE. You can't buy it and call it that it will become multi-bagger. It's not possible, because at 915 price to earning, you are buying that business. So do you think that the PE will get 5,000 to get 5x? Not possible. Third thing is, something happens in the company and margin expands. Because if margin increases, then automatically earnings will increase. Very interesting operator. So there is some funny, interesting things happening in stock market, and these are the operators that actually do some illegal things. But this is very important. If the stock doesn't have an operator, it can't be multi-bagger. So very unethical to say, but yeah, this is the thing. Thing is, promoter also should have good capital allocation. What does good capital allocation means? That providing capital to good businesses. Like for example of Titan, we saw that they bought this lease gold model, wherein they are not buying gold. So that improves the capital efficiency of the business. And how do you identify which is a good capital allocator business operator? It's just this number, ROE. If a business has high ROE, it's more efficient business. It's a better business. Does it have some sort of competitive advantage or moat that we talked about?
Can you explain what operator?
Okay, so operators are basically people having good connections, having a lot of money, and they manipulate stock prices. So, for example, Harshit Mehta was an operator. If you heard about him, Ketan Parekh was an operator. Even Rakesh Jhunjhunwala himself was an operator, even though he wasn't like referred to as one. So basically, what he does, he manipulates the stock prices in his favor. This we discussed, high ROE. Okay, very interesting, pricing power. So for example, if Adidas is selling shoes, he will sell that this shoe is 5,000 rupees, and you will buy it. Because what is happening here is, Adidas have good pricing power. Apple will say that this is $1,000 phone, and the manufacturing cost will be less than $300. This shows that the business has pricing power. And all the, if you see multi-baggers, they have pricing power. For example, Titan case, Titan charges most, as compared to other jewelers, it charges more, what you can call as making charges. So this shows the pricing power of the business. So, but it is not compulsory. Like I showed you the example of Balkrishna Industries. It doesn't have any pricing power, but it has one advantage in form of cost of production. Its cost of production was so less that even though it doesn't have the pricing power, but even though it can make money. Okay, so now the last thing that I want to discuss is that we discussed all about that for multi-bagger it should have good ROE. The price earning multiple should increase. That means the perception increase. So the perception has to increase, and it has to be from an industry which is sunshine industry. Like for example, which has a good future. At least we are thinking about it. So for example, what will be these industries will be? Or today it can be something related to technology, maybe EVs, maybe something in green energy, solar energy,
AI,
artificial intelligence, green hydrogen, then something in healthcare, maybe biotech, something. So the industry has to be in fancy. For today, like for example, Nvidia stock, it went to be almost 100 bagger in almost 6-7 years. So it was in an industry that was a very sunshine industry. So for the perception to improve, it has to be in a sunshine industry, but it has to be backed by earnings. Like for example, I show you that example of Bharat Electronics. There is no earnings that are coming. The business doesn't have any earnings growth. but the price earning is increasing. You have to bought a stock which should increase the earnings and also the P simultaneously.
The P you said it must be low while when we are buying. What is the lower limit?
Actually depends on industries. So for example, consumer businesses you will not get for less than 30 price earning. But for commodity businesses like steel, you will maybe get it at 10p. And even at 10p, it might be expensive. And for a 30p, a consumer business might be very cheap. So it totally depends on the industry, on which industry the stock belongs to. So look at it from industry standpoint point of view, not from the whole market. There is no fixed number that you can say that below this P, this is a good stock, or more than it you should sell. That's a baseless theories. But one thing is there, what happens generally in bull market, so we are in a bull market where the prices increase, there is P expansion that happens. The price earning increases. And in a bear market, the P decreases. So even though the earnings might come, but the P decreases. That happens in a bear market. So if you want a multi-bagger, then you have to buy it at the starting of a bull run. So for example, the bull run started in almost April 2020, and the bull run is happening till now. So if you are buying stocks now, then very difficult to get multi-baggers. It is possible, but you have to buy it in the starting of when bull markets are there. So obviously, market happens in cycles. This is the bull market; it will get over at some point. Then bear market will come. Then again bull market will come. Then you can buy, no problem. Right. So if you when there is thing about market timing and when we should buy, but there is no fixed thing about it. But if you want a compounder stock that compounds at 15-20%, you can buy any time and get that money. Because ultimately you are buying a stock, you are not buying the bull market, right? You can in any, this is saying that anywhere in the world there is a bull market. कुछ भी हो रहा हो दुनिया में, कहीं एक स्टॉक में तो bull market होता ही है. मतलब even in the recession times of 1970s, there were stocks like Intel, Sun Microsystems. Even in that time, they became 100x, 1000x. So there is some bull market somewhere else happening. So okay, so I will finish here, and if you have any questions, you can ask. So any question? Or any thing you want to check if this stock can be a multi-bagger?
CAGR.
CAGR is basically compound annual growth rate. So you read about compound interest. So that this is the rate of compound interest that happens. There is a formula of compound interest at P into 1 plus R power n. So n is number of years, R is the rate. So that is CAGR. Okay.
ग्रीन हाइड्रोजन सच्ची में बढ़ेगा क्या?
It's a good story, but you never know which story will capitalize.
मतलब ग्रीन हाइड्रोजन आखिर में लगता तो नहीं है कि काम करेगा, मतलब एनर्जी तेरा खर्चों की लॉस होगा.
Solar energy is sure to be there, so you can look at solar. But if you see the stocks of solar, like for example, a very good stock is this Vari Renewables Technology. So this basically makes EPC modules. Basically it gets solar cells from China, does some assembling and makes modules. Look at its P, it's 100 times earnings. That is the problem. Even though the theme is good, but the multiples are exorbitant. If you see this stock, P went to more than 200 P also. So that is the problem. Even though you have identified a good theme, a good stock also, maybe the multiples are so high that even you buy it, it may not be a multi-bagger. Like for example, this stock was a multi-bagger. Like if you see the price of it, the stock price was in 2020 COVID time, it was around 1 rupee. Now it is 1400. So 4 years, 1400x. So that is possible, but you have to ride the trend at very early. Like nobody was talking about in India solar industry can come. Then there was whole thing about PLI scheme, Make in India, and Make Solar in India, and all this encouragement by government and all this PLI scheme, and they did these things. So any other question?